FNO tightening now, is markets set to open lower? What are the cues from US markets and amid the tension from Middle East coming in? What are the top cues that you need to focus on for your trading day? We set you up. Morning. This is Morning Cafe on ET Now you're watching. This is Priyanka and along with me Shriyansi. Shriyansi, a very good morning. We're meeting after a day. Truncated week it was. But the action-packed day it could be because the SEBI tightening norms on derivative is here. That is one big cue which we have to watch out for entire FNO space and how market is going to open, set lower. Also, there are some macro cues which we are following very quickly and very constantly.
Well, absolutely. There's a host of macro cues and geopolitical tensions that we're keeping on our radars. Let's get started by looking at that because the conflict in the Middle East has broadened with Iran directly entering the war after raining missiles on Israel. Iran refuses to budge with Iran's president, who is in Doha, warning Israel of far stronger responses if it continues military operations. He also sent out a message to the United States and European countries asking them to keep Israel in check. He also added that the Iron Dome defense system that Israel relies upon is more fragile than glass. Meanwhile, Israel has declared that it will retaliate against Iran's missile attack but has not shared a timeline yet. PM Benjamin Netanyahu held consultation with the heads of the security establishment in Tel Aviv as well, and he also wished the people of Israel on the occasion of the Jewish New Year as well, affirming that it will be a year of total victory for Israel. But remember, Iran is not the only nation Israel is in war with. In fact, it is now fighting on 4 fronts against Hezbollah in Lebanon, Houthis in Yemen and Hamas in Gaza as well. So that's the latest update coming in. When we take a look at that, let's also listen into Deputy Spokesperson of Israel's Ministry of External Affairs, Alex Gandler then.
Israel is working its way in order to defeat all the proxies of Iran, be it Hamas in Gaza, Hezbollah in Lebanon, Kataib Hezbollah in Iraq, and the Houthis in Yemen. It does not have the capabilities to strike Israel without rockets. They don't possess a formidable air force. They do not possess any formidable ground forces. The way that Iran is acting is by creating and then subsidizing heavily proxies that act as its army abroad while they are taking over other countries. So our response would be to stop that modus operandi, to free both Israel and those countries from the strangleholds of Iran.
Meanwhile, we've got reactions from more leaders. In fact, world leaders also went into a huddle as the conflict widens. US President Joe Biden joined a call with the G7 leaders to discuss Iran's attack against Israel and to coordinate a response on this, including new sanctions. According to the White House statement, President Biden and the G7 univocally condemned Iran's attack against Israel. President Biden expressed the United States' full solidarity and support to Israel and its people and reaffirmed the United States' commitment to Israel's security. Let's listen in to what exactly Biden said.
The United States is fully supportive of Israel. At my direction, the United States military actively supported the defense of Israel, and we're still assessing the impact. But based on what we know now, the attack appears to have been defeated and ineffective. And this is testament to Israeli military capability and U.S. military. It's also a testament to intensive planning between the United States and Israel to anticipate and defend against the brazen attack we expect.
And with looming threat of escalation, then global powerhouses are positioning themselves, resulting in mostly predictable alignments. World leaders called for restraint after Iran launched its biggest missile attack so far as well. Let's listen into what Keir Starmer, UK Prime Minister, then had to say as well.
But I utterly condemn this attempt by the Iranian regime to harm innocent Israelis, to escalate this incredibly dangerous situation and push the region ever closer to the brink. We stand with Israel and we recognise her right to self-defence in the face of this aggression. Iran must stop these attacks, together with its proxies like Hezbollah.
Now let's go across and also listen into what India's External Affairs Minister Jai Shankar had to say on this.
if one looks at the current situation, I think it would be right to start off with October 7th. We regard October 7th as a terrorist attack. We understand that Israel had a need to respond. But we also believe that any response by any country has to take into account international humanitarian law, that it must be careful about any damage or any implications for civilian populations. And that given what has happened in Gaza, it is important to have some kind of international humanitarian effort out there.
All right, then that's the word coming in from External Affairs Minister S. Jaishankar. Then let's move on and let's take a look at what the US markets really did against that particular backdrop that we've just sort of explained to you. The three major US indexes, when you take a look at them, did not do all that much, ended slightly above the flat line. And I'm talking about the S&P 500 adding just a tad bit, while the tech-heavy Nasdaq as well rose just about 0.1%. The 30 stock Dow as well added roughly 39 points or 0.1%. And that's the kind of gain that you've seen coming in for that particular index as well. And when you take a look at what else the market was looking very closely at, of course, there's private sector hiring that was better than expected in September, according to data from the ADP issued on Wednesday as well. And there's, of course, a whole host of cues that we're keeping a very close eye on, because further labor market data also awaits investors with the release of weekly initial jobless claims. The main event, of course, for traders and the Federal Reserve, as it has embarked on a rate cutting cycle, is September's payrolls report. That is also due on Friday morning, and that is also something that we're keeping a very close eye on. And that largely is the kind of handover that we're looking at when it comes to US as well. When you take a look at Europe, then you're looking at not much of a move coming in there as well, because a mixed close is what you're looking at when you look at the European markets as well, Priyanka.
Yes, absolutely. And what happened, Shreyanshi, there are a lot of action which is to be eyed on that is coming from oil space. Now, because we have comments from Saudi oil minister also, and in fact, the entire Middle East tension. Let's see how crude pans out, the move on the crude pans out. For now, crude has clinched back to some gains. We are nearly $74 per barrel, but remember, it did fell below 70. In fact, very interesting comments which came in from, from the Saudi oil minister also. He mentioned that crude could even drop to as low as $50 if the OPEC does not stick to its production limit. But then let's understand. Now, the tension between the Iran and the Israel, that is, of course, weighing on the move the way crude is moving. Israel's ambassador to the United States, they've also warned that Israel will have an exact painful response. And now traders are little fearful that there could be, Iran can, in fact, target Iranian oil factories can be attacked in this entire attempt. So that's how the crude movement needs to be tracked very closely. However, it has just inched up a little. It is nearly $74, but then there is a bearish tilt in the oil market inventories, along with the comments coming in from the Saudi oil ministry. So crude movement needs to be tracked very closely from here.
Well, absolutely clutching onto those gains after eking out all of those gains on the backdrop, against that backdrop that we explained to you. But let's also kickstart our coverage this morning with the Japanese markets. Then Nikkei rises over 2% as the yen weakens on the back of talks between the newly elected Japanese PM Shigeru Ishiba and Bank of Japan Governor Kazuo Uda as well. Ishiba said that the country is not in an environment for an additional rate hike, and the yen weakened after Ishiba's remarks, as markets interpreted them as reducing the chance of a near-term interest rate hike. Now, the dollar was last up about 0.7% against the yen at 144.71 yen per dollar. Ishiba's newly appointed economy minister Roichi Akazawa also voiced hope that the BOJ would be cautious about raising rates further. So that's the latest update coming in from there.
And right now, the Nikkei looks strong. We are up 2.5%. Let's see how it fares out, whereas most of the Asian markets are closed for the holiday. But then now let's get you the move from, in fact, the Fed comments, which is talking about the US central bank's fight to return inflation to its 10% target may take longer than expected to complete the limit. How far interest rates can be cut? This is a comment coming in from Richmond, who's the Fed president. In fact, Fed President Thomas Barkin, who said this comment. Additionally, He said that he supports the half percentage point rate cut the Fed approved last month and agreed the benchmark rate could fall perhaps by another half a percentage point by the end of this year. Now, this takes account of how far inflation could have declined. He also expressed concerns over sticky inflation and the labor market.
Alright, then shifting focus to the US labour market then, where private sector hiring has picked up in September, indicating the labour market is holding its ground despite some signs of weakness. Companies added 143,000 jobs for the month, an acceleration from the upwardly revised 103,000 in August and better than the 128,000 consensus forecast from economists as well.
Alright, now let's get you some more news. Tesla slips after EV maker misses estimates on deliveries in the Q3. The Elon Musk-led company handed over 462,890 vehicles to customers in the last 3 months. Now, this is up 6.4% from the figure earlier a year ago. Now, deliveries came up shy of the roughly 463,900 units, which was expected by major of the analysts. Company, however, posted its first increase in quarterly vehicle sales this year, though the automaker let down inventories, expecting more of a bump from China, who's boosting electric car subsidies.
Alright, then keeping it with automakers that seem to be in the slow lane, US automaker Ford reports weak growth in domestic new vehicle sales in the third quarter as buyers continue to shy away from purchases on affordability concerns. Remember, major automakers in the United States, including Toyota and General Motors, reported weaker sales for the quarter, with some also citing affordability concerns and fewer selling days as a drag on performance as well.
Alright, we'll stay for a short break here. More cues to come from the Asian markets, and also we'll tell you that how is GIFT Nifty looking right now. Don't go anywhere. Welcome back. You're watching Market Cafe on ET now, and now time to check more cues from Asian markets. Of course, it was the gains coming in from the Japanese market that has led the gains coming in from the Asian markets, and this is after we've seen some sort of gains in Wall Street. Now, what is actually working for Asian markets is the yen, which has appreciated. In fact, it has slid to as weak as against or it has slid to 146.54. And now this movement is just because Japan's new Prime Minister, who's met the Bank of Japan governor, and post meeting him, he made some comments that currently he does not support another rate hike, and that's what fared the markets up. We won't be able to get cues from China as well as South Korea. China is shut for holidays, and in fact, even South Korea for the National Foundation Day. Now, a lot of data which is coming in from Australian market also, and in fact from Japan also. We've got Japan's PMI data on tap for September month as well as for August retail sales data, which has to come from Hong Kong market. So more cues to come in. Let's see how Japan continues to stay strong. However, the comments are positive and supportive for the market. But let's give you quickly the Asian markets. The GIFT Nifty also, that what are we tracking? Right now we see there is a cut of nearly 245, nearly a 1% coming in on GIFT Nifty. So markets are set to lower open. There's a lot of action which is expected. High volatile rate could be on the back of the SEBI tightening on the F&O norms. Now let's see, would large cap provide any cushion too? Because the major action could be in the small and mid cap and majorly on the F&O segment. So we need to watch it out. Right now we look like a nervous start.
Well, absolutely a nervous start is what we're penciling in at this point, and especially with that not very exciting handover coming in from Wall Street as well. Oil and safe haven gold are the only ones clutching on to those gains at this point. But welcome back. Thank you so much for staying tuned in. Well, let's get you some more news and updates then. And market watchdog SEBI unveils new 6-step framework to regulate high-risk derivative trading. Now, move includes increasing the contract size to 15 lakhs from 510 lakhs earlier, and limiting weekly expiries to 1 per exchange. Now, the new rules also effective from the 20th of next month. Let's also go across to my colleague Ankur Mishra, who's standing by with more details there.
As we reported here on ET now, SEBI has come out with final circular on FNO trading. Now, all 5 recommendations which were made by the committee, which also featured in the consultation paper, has found place in the final circular as well. These 5 of the things which SEBI has announced includes upfront collection of margins, removal of calendar benefit, intraday monitoring of position limits, and more importantly, the contract size of index derivatives. Now, earlier, the contract size was limited to 5 to 10 lakhs, which is now being increased to 15 to 20 lakhs, and a glide path has been given from November 20 that will start. In fact, in all the announcements, there is a glide path which is given for the implementation starting from November 20 to February 2025. Apart from that, there is also an announcement of rationalization of weekly expiries. As far as the volumes are concerned, there were huge volumes in these contracts, and SEBI has come hard on all these contracts. Now, one contract, one exchange needs to be decided, and this will happen with a consultation of both the exchanges together, and finally, only one expiry contract will remain per exchange. There is also increase in tail risk coverage on the day of options expiry, and that will be implemented from 20th November 2024. All in all, after coming out with a study at 93% of investors were making losses in FNO, now SEBI has come out with norms to curb them, and sources have informed us that this is just a beginning.
All right, Ankur, thanks so much for all the detailed insight on this. This one is for sure weighing on the Indian markets. We also spoke to Sandeep Bandyopadhyay and Sumit Agrawal to understand the significance and the possible impact. Let's listen in.
There will be definitely an impact on the market as far as the volumes are concerned. You will see the market volume, particularly in the FNO side, shrink significantly, at least in the initial phase. It may eventually pick up when things stabilize a bit, but initially there will be significant shrinkage in the volume of FNO contracts, FNO trading in India. As far as the brokerages are concerned, they will get impacted. Their income will get impacted. But I think, as is being told, I think these are for the good and structural benefit of the market in the long run. So, I'm not too worried about the market, as far as long run is concerned, or the impact of these measures on the overall market in the long run, or even medium term. But short term, there will be definitely a negative impact. There will be, sentimental negativity, and it was expected, though this entire measure which is being taken by SEBI was on expected lines, there will be definitely a negative or a dent in the sentiment at the beginning.
I think the exchange as well as the stockbrokers for a shorter term are going to have some impact, especially if you were to see the concentration of liquidity that is going to be now surrounded on a single benchmark index. Earlier, all the traders which used to spread their activities across various contracts, they'll have to now focus their trading strategies on one index. Now, this has, and in the past also, has brought out new challenges and new issues. So I think in that sense, exchanges as well as their members will have to reset their institution, and there will be new challenges as well.
All right, and that's a take coming in from the experts as well. The contract size has been increased to 15 lakhs from 5 to 10 lakhs. But how will this really 6-step framework impact FNO trade and key players in the capital market space? Then Sharad is joining in with an explainer.
Well, yes, as per Jeffries, the SEBI's measures has been taken to do a calibrated tightening in the FNO market, and the impact analysis states that roughly 35% of the total industry premium, which is on a weekly contract basis, are likely to get impacted. Now, the key deviations versus the earlier proposals which had come in the consultation paper, the two important things come out. A lower hike to expiry day of margins is of 2%, and earlier it was of 8%, and also the lot size hike that is almost of 2 to 3 times. Earlier it was expected to be 3 to 4 times. Now the most impacted players are expected to be discount brokers, followed by the exchanges. But now let's look at how the implementation is actually going to pan out going ahead, and there are certain timelines which need to be understood. On November 20th, 2024, 3 important things will happen. Extreme loss margin will be hiked by 2% for short option contracts, and the minimum contract size for index derivatives is also expected to increase. There will also be rationalization of weekly index derivative products to product per exchange. On 1st February 2025, 2 important things will happen. The first one being removal of calendar spread treatment on expiry day, and also the upfront collection of option premium from buyers by trading or clearing members. Lastly, on 1st April 2025, intraday monitoring of position limits would be there. To simplify, discount brokers like Angel One Zerodha, there's a high potential impact coming in, and also Angel One in the listed space. Traditional brokers will have low potential, such as MOFSL, ICICI Securities. Exchanges, BSE, NSE, they will be highly impacted. While if you look at wealth managers, AMCs, depositories, RTAs and clearing members, there's expected to be little or no impact at all.
Sharad, thanks very much for bringing more clarity on the subject. So the move, today's action and the move in these different spaces could be varied. Now let's move on. Finance Ministry releases GST collection numbers for the month of September, and as per the data, gross collection in September saw a jump of 6.5%. Now, government believes that they've collected, in fact, 1.63 lakh crore as GST in the same month last year. Let's get the other figures also, as well as bring on board my colleague Prakash Pridarshi, who's filed this report earlier.
The Finance Ministry has released the GST collection numbers for the month of September, which shows 6.5% growth year-on-year basis, stands at rupees 1.73 lakh crore. These numbers are 6.5% higher as compared to last month during same period, which was rupees 1.63 lakh crore. But there is a marginal decline in GST collection numbers as compared to previous month, which was rupees 1.75 lakh crore in the month of August. Along with that, this marks the second consecutive month of single-digit growth in GST collections. Average GST collections for the second quarter of the current financial year stood at rupees 1.77 lakh crore, down from rupees 1.86 lakh crore recorded in the first quarter. However, it was a 7th consecutive month where the GST collection exceeded rupees 1.7 lakh crore. That's a good news for the government. Along with that, for the first half of the financial year 2025, India's GST collections reached rupees 10.7 lakh crore. On back of multiple reforms taken by the GST Council, we can expect that the GST collection numbers may grow further.
All right, thanks Prakash for that update coming in. Now let's get to some more updates. Then days after Swiggy filed DRHP for its 10,000 crore rupees IPO, US-based investor Invesco has increased the fair value of Swiggy in its books to $13.3 billion as of July 31st. Now the valuation ascribed to Swiggy by Invesco was 24% higher than the $10.7 billion value at which the firm invested in Swiggy in 2022 as well. Remember, Invesco is not participating in the OFS component of Swiggy's upcoming IPO, but they've still upped the valuation at $13.3 billion, and that's the update coming in there as well.
All right, so that's more from the primary market, but we stay for a short break here. More to come on the other side of the break. We get you the comments and the business updates from the FMCG space and the other news, as well as the brokerage reports. Don't go anywhere. Welcome back. You're watching Market Cafe. Now let's get your action from derivative space. From Tuesday, how did it close? How did the close look like? Of course, there's a call writing which was happened at the strong call writing happened at the 25,900 strike. But then Ansh is joining in with more details on that. Ansh, has the data changed? Of course, this looks significant changes to what it was up till Monday. Please get us the key highlights.
That's right, but actually action was missing previous session. If you see the chart as well, Nifty gave a good volatile session, but it closed almost flat near the lower range of that sideways consolidation pattern. Also on option front, we are seeing very strong call writing happening at that 25,900 strike price, indicating option traders are expecting some heavy resistance around this level. So this is a level where we may face some selling pressure in today's session. Now if we talk about Nifty Bank, then this is interesting. Nifty Bank has actually retraced around 38.2% from its current rally, which started in the second week of September, and the 50% retracement is around 52,400 mark. So this is a level which may act as a good support if we see a more downfall in the coming sessions. Whereas if we talk about index options, then we are seeing most active call writing happening at a 53,500 strike, indicating resistance around this level. Now if we talk about FNO stocks that are in focus, then we are seeing significant long build-up happening in Atul, Granules and Tata Chemicals, where a short build-up in Muthoot Finance and Manappuram Finance. So keep an eye on the stocks.
Absolutely, Ansh. We'll be keeping an eye on all of those counters. But since you mentioned stocks, let's get a little more stock specific then, because JP Morgan has also upgraded KPIT Tech to overweight from neutral, which was their earlier rating. And they're also saying that this is a top pick in the ER&D space. So tell us a little more about this bullish note then.
Well, yes, they have actually upgraded their rating from neutral to overweight, setting a target of 2,000 rupees. Currently, the stock is trading around 1670 rupees. So, target price comes to around 20% away from its current market price. Now, JP Morgan has said that the stock has been underperforming compared to its peers over past 1 to 3 months due to negative news surrounding around the electric vehicles. Also, this underperformance is attributed to global OEMs delaying their EV targets. However, the key clients like BMW, Honda and Renault have not announced any scale back in their EV targets. Also, BMW has maintained its commitment to 50% EV target by 2030, while Honda is aiming for 40%. So JP Morgan has identified KPIT as the top pick in engineering, research and development sector. Consecutively, they have also increased their revenue and margin forecast by 1 to 2%, resulting in EPS going up by around 1 to 4%. So keep an eye on the stock.
All right, let's keep a watch on KPIT on this brokerage note. Thanks very much, Ansh, for bringing all these details for our viewers. Moving on, now Ria joins in to talk about the stocks which could be in action because of the news flow. Ria, of course, now the business update has also started coming in. What did you gather for us?
Yes, good morning. So let's take a look at the stocks that are going to be in focus today. First up, we have two FMCG names in focus on the back of their Q2 operational updates. Now, first up is Dabur, where the management has said that although the demand is improving, the heavy rains and floods have impacted the out-of-home consumption, and they've also seen some impact in the beverages business. Now, going forward, they are expecting mid-single-digit declines in the revenue led by the India business, and the international business is expected to report double-digit CC growth, and overall the lower sales are expected to impact profitability. On the margin side, operating margins are expected to decline in the range of mid to high teens. Let's also take a look at Marico. Now out here, the consolidated revenue growth has remained in the high single digits for Q2. In the international business, that has delivered robust low teen constant currency growth, and the domestic business has posted mid single digit volume growth, and going forward the company is expecting to deliver double digit revenue growth in this year. Let's also take a look at some pharma names that are going to be in focus today. First up, we have Dr. Reddy's, which has signed a voluntary licensing agreement with Gilead Sciences to manufacture and commercialize the lenacapavir tablets in India and in other countries as well. And this approved drug is indicated for the treatment of HIV. We also have Zydus Life Sciences in focus, which has received the tentative approval from the US FDA for the enzalutamide 40 mg and 80 mg capsules, which had last year annual sales of USD $1,417 million in the US. We also have Aurobindo Pharma in focus, which has received the US FDA approval for the Cephalexin tablets for the 250 mg and 500 mg tablets, which are expected to be launched in Q3 of FY25. We also have one defense stock in focus today, which is Bharat Forge. And out here, Kalyani Strategic Systems Limited from India and the US-based AM General and Mandis Group has partnered to co-develop and co-produce the next generation artillery platforms with advanced recoil technology for global markets. And lastly, we're also keeping an eye out on Ashoka Buildcon, which has received letters of award for 3 EPC projects from the MMRDA, collectively for 1,737 crores.
Absolutely, thanks Riya. Looks like it's going to be a busy day for us because there's a host of stocks to keep an eye on. When you take a look at the FMCG counters, the likes of Dabur and Marico, those are the ones that make it to brokerage radar as well, on the back of brokerage notes coming in from Morgan Stanley as well as Investec. In fact, Varun is standing by with all of those key takeaways.
So Dabur and Marico have given their quarterly updates and they are not that great, especially if you look at Dabur, the quarterly updates are on the weaker side and they have raised concerns on, basically the brokerage houses have raised concern on the quarter 2 update. If you look at Morgan Stanley, they say they have a equal weight rating with a price target of 772. They say that the Q2 sales decline is in mid single digit versus the management expectation of a good growth improvement. Also, the weakness is led by correction and distribution inventory, especially the general trade channel. Also, it has been impacted by heavy rains and floods. The beverage segment has been impacted, and in Q2, the EBITDA is expected to decline in mid to high single digit. Also, Investec has a report with a hold and 638 price target. They say that the quarter is the weakest in 4 years, and they expect 5% consolidated revenue decline in Q2. Also, the India volume is expected to decline around 10%. EBITDA decline of around 15% and PAT is expected to decline around 17%. So the update given by Dabur has raised concern among the brokerage houses. And if you look at Marico, there is a Morgan Stanley note on Marico. They have an equal weight with 625 price target. They say that the Q2 sales growth is in high single digit, which is almost in line with estimate. The realization in domestic business is offset by headwinds internationally. So the domestic business is good. Internationally, there are headwinds. Also, the parachute volume, it has increased by 5%, which is aided by price hike that the company has taken. Saffola posted low single digit revenue growth, and the margins for this company would be moderate due to the vegetable inflation in Q2. So if you look at the overall update given by both this company, they are a bit weak and brokerage houses are a bit concerned more on Dabur.
All right, so this pack could possibly disappoint the markets on the business updates, and so is the view coming in from brokerage. Thanks very much, Varun, for bringing in the entire commentary and the comments which is mentioned on the notes. But then Titan could also be in focus today as Morgan Stanley has maintained its equal weight stance and sees the jewelry segment to grow 16% Y-on-Y basis. Sharad joins in with more details from the note. Sharad.
Well, yes, Titan is in focus and Morgan Stanley has come out with its report and they have maintained an equal weight with a target price of almost 3,570 rupees. Now, they have stated that there is roughly 80% probability that the share price is expected to increase in the next 15 days. Now, as per the estimation, the jewelry segment revenue for Q2 is expected to grow almost 16% on a year-on-year basis, and this is aided by a demand boost coming in the month of July. Of course, there was the duty cut which was announced, and that benefit might be coming in the Q2 numbers. Also, a high base effect of a delayed Pitru Paksh in October last year will also be an important factor to watch out, and overall it is expected that there would be an improvement coming in the growth momentum.
Thanks very much, Sharad. Let's see how this pans out for Titan for the trading day today. Moving on, well, that gets you some respite for at least the metal space where the brokerages are turning bullish. In fact, metal space has seen its dream run also since the cyclical cycle is on now. Now, Nomura, they have marked Indian steel makers at a sweet spot, and they've highlighted 2-3 key triggers for this. They speak that steel companies are on path to deleveraging their balance sheet, and the second big trigger would be the rising domestic demand. Of course, the cyclical recovery which is at the play. They also spoke about that the higher ROEs, return on equity, as well as the improved incremental return on capital employed, this on the brownfield expansion especially, this would work in favor of the steel companies now, and the higher multiples are possible for the steel companies because the global monetary is also easing out. Now, Nomura remains constructive on Indian steel companies. They've given an upward targets for JSW Steel, which stands at 1,220, as well as for JSPL, the target is now 1,200. Not just Nomura, in fact, Morgan Stanley also came up with note on steel companies, and they have also spoken that they also see green shoots for spread, at least in near term now. Now, they may remain overweight. Target for JSW Steel coming in from Morgan Stanley is 1,150. They spoke about that now the next 30 days, there's a 80% chance of the share price going upwards. China stimulus, which has de-risked some of the industry concerns now, that is also acting as a positive for the companies. Now, domestic prices are similar to the import, so the import parity also comes in. You remember that the last year domestic prices were at 8 to 9% of the premium. So looks like metals could provide a cushion here. They could be the space which could be on the buying radar for traders, despite all the possible action, the volatile action which is bringing in from the SEBI's action today.
Well, absolutely. And there's a lot on brokerage radar. Then when you take a look at what JP Morgan then had to say about Cipla, they're maintaining an overweight rating, target price at 1,165. And in terms of what else they're talking about, they're also highlighting the healthy domestic growth outlook. They're also highlighting the focus on peptide and complex generics when it comes to the US markets. And they're also talking about how China is going to be a key market, but at a largely nascent stage at this point, and that is the view coming in from JP Morgan on Cipla. Let's also take a look at what Investec then had to say about Godrej Properties, because they're upgrading the counter to a buy rating and they have a target price at 4,200 rupees. They're talking about strong growth trends amid diversification as well, and that is something that they're highlighting. So the growth trends are strong, and that is the word coming in from Investec and Godrej Properties. But they're also saying that the company is not too reliant on a single region for growth, so they don't see any concentration of all of this growth that they're seeing for Godrej Properties. And they're also talking about how the company at this point has established brand recognition. That is something that they've managed to accomplish. They're also talking about how sales growth is something that remains sustainable. So quite bullish in terms of the note coming in on both Godrej Properties as well as Cipla. And that is what brokerage radar looks like at this point.
All right, that's the action now from the world officer, but then I'll get you more news from the global news. Now, amid soaring tensions in West Asia, the Ministry of External Affairs has issued a travel advisory to all Indian citizens, urging them to avoid all non-essential travel to Iran. It also advised Indian nationals living in Iran to remain vigilant of the situation, stay in contact with the Indian embassy in Tehran. Earlier, the Indian embassy in Israel issued an advisory to all its citizens, urging them to avoid unnecessary travel.
All right, then moving on, let's get you some more news and updates. Ladakh climate activist Sonam Wangchuk has been released after nearly 36 hours in detention. After his release, Wangchuk said the Union Home Ministry has assured him of a meeting with either the Prime Minister or President to address his concerns. Moving on to some more news and updates back home, then a day after the Supreme Court hauled Maharashtra police, 2 trustees of Badlapur school have been arrested. The duo would be handed over to the special investigation team probing the alleged sexual assault of 2 kindergarten girls. The trustees had been absconding for the last 51 days and have been booked under POCSO. Moving on then, Navratri, one of the most vibrant and widely celebrated festivals in India, starts today. Celebrated over 9 days, the festival is dedicated to the worship of Goddess Durga and her 9 divine avatars. From all of us here at ET Now, we wish you a very happy Navratri.
All right, with this, it's a wrap on Market Cafe, but the market action begins at 8 a.m. Don't go anywhere, stay tuned.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.